All right, so welcome back. In today's video, what I want to do is share with you some insight as far as big corporations go, and they're definitely taking a defensive strategy. And the big question is will the economy continue to tank with it? So ultimately, what's going on and happening? If we go ahead and take a look, I've got some screenshots here from different news sites. There's a lot of firing going on, and a lot of employees are being laid off. So, for example, from Amazon here, laying off thousands, 10,000 workers right here, as soon as this week. So this is from the New York Times, so they're looking to roughly cut about 10,000 employees here. Then if we take a look at here, Mark Zuckerberg over the last week or so, looking to cut about 11,000 folks here. And that's also pretty significant. The Meta employee thing, very interesting because, there's a lot of things that are negative about the metaverse that people are talking about, especially inside the company. So when we start looking at it, the Meta employees are posting negative comments about Mark Zuckerberg on an anonymous forum, blind. And they're saying that he's going to kill the company. And for me personally, I don't really think that much of the metaverse. I don't really want to wear goggles and so on. I like to connect with people personally. This is exactly what I do when it comes to, my own personal business. When we deal with one-on-one coaching and mentoring for options, I work with people 9 months at a time, and I like the personal connection. So if you want to check that out, definitely visit our website at tradersfly.com or criticalcharts.com and you'll get hooked up. But anyway, point being, is I like the personal connection, but here everything's going into this, digital virtual reality, and all that sounds kind of cool, I guess, from a tech perspective, but not everybody's into that kind of thing. So anyway, they're trying to battle this out, and the stock is tanking. They're spending a boatload of money into this. And one of the ways to get that money back is to lay off people. Unfortunately, that slows down production and pipeline. So for example, stuff that I do right here, as we make YouTube videos or we make courses, I could go ahead, and we have a very small team. But of course, let's say if it was just me, then I wouldn't be able to produce courses as quickly, or I wouldn't be able to create the thumbnails as quickly. So there would be less videos and content that would go out. So the same thing here is you could still continue to do what you need to do, but unfortunately, then it would slow you down. So here, as they're looking to go ahead and try and spend more money into this metaverse, so you believe in this vision, whatever the case is, no problem, his money, his company. But the workforce, they usually see things before even the CEO or head person sees things. And that goes the same with me inside my company. So usually the people actually doing the job on the front lines see things way beforehand. So it's something to really be aware of, is that when you start seeing this, even things from like Disney here, to freeze hiring, possibly conduct layoffs. This was an internal memo. And of course, the big kahuna here, Elon Musk, also firing a bunch of people all over the place. So what you're starting to see is a lot of defensive positions here on these bigger companies as they start laying off people. And if you start calculating what they're really trying to do, I just did some calculations earlier. Let's just say we go in with a person that's making, and again, they're laying off at different levels of the company. Some people are making, $200 an hour. Some people are making $1,000 an hour. Some people are making $20 an hour. But let's just call it, some people are making, let's take this Amazon example, for example. Let's say somebody's making $50 an hour and you have a 40-hour work week. Okay, so you're making $2,000 a week. Let's say we go 50 weeks in a year instead of 52. So you're making $100,000. Okay, simple math. Now, we'll take 10,000 employees. Okay, and now we're looking at 1,000, million, billion. They're saving a fortune, right? By cutting employees right here, they're saving per year $1 billion. And that's what, when you start looking at share prices and stock prices, that's a lot of money. And that's what pushes stock prices higher. It's like, okay, great, they're going to be saving money. Unfortunately, the company will then grow a little bit slower oftentimes, but they're looking to cut costs because employees and salaries and wages, these things are very pricey. So if you're looking at really just the cost of that, it starts to add up. Even here with Meta employees, and they're doing software engineering. Not that you can get $20 a software engineer, but let's say you're looking at $75 an hour times, let's say they're working 60 hours a week. That's $4,500 just in a week times, let's go 50 weeks in a year. That's $225,000 salary for those people. They probably also get perks and a lot of other things. And then we look at about 11,000 employees. Okay. Now you're looking at a fortune, right? $1 billion, $2.5 billion almost saved per year. That's a lot of money, right? So when you start looking at some of these things, these companies are really struggling a bit. They're seeing the numbers are starting to come in and they're like, well, we need to cut costs. We need to be able to extend the runway. And what they're really trying to do, if you really look at it, is you have a financial runway, right? No matter what you are, no matter if you got Zuckerberg money, Jeff Bezos money, there's a runway. Now, their runway is very long, right? So if you have an airplane here and you got a short runway, you'll crash, right? You don't have enough to land. Like, let's say there's a big mountain right here. Okay. Well, if you got a big mountain, you got a short runway, you got to get over that mountain. If that doesn't work, right, you need a longer runway because you don't have enough capital to get over this hump. So this is where, when you start looking at things with a longer runway and then the mountain's over here instead of the mountain over here, you have more range for that company to keep doing what it needs to do for, let's say, 3 months, 6 months. It's kind of like, let's say you make $2,000 a week. Okay. And then you go ahead and, you're blowing, let's say $6,000 a week for expenses, or sorry, $6,000 a month. Let's say you're making $2,000 a week, but you're blowing $6,000 a month. Well, you have a pretty good runway, right? But on the other hand, let's say you're spending a lot more and you're blowing, where's my mouse here? You're blowing, let's say, $4,000 a week, okay? And you're only making $6,000 a month, okay? And you're blowing $4,000 a week. Well, yeah, you're in the negative. You can do that for a certain period of time, but let's say you have $50,000. Well, you could do that for a little while, but you can't do it forever. Now, if you have $3 million, you could do it a lot longer. So the point being is that runway is longer when you have more cash. And by doing this, they're extending that runway, that ability to go further without taking as big of a hit, and allows them to kind of see what the marketplace is doing. It allows them to kind of slowly now identify where they want to be, what they want to do, see the competition, pivot and shift and change direction if needed. It allows them to kind of slow things down. And when you slow and calm things down, it just makes things a little bit more, shall we say, at peace within the company internally, and that could be a little bit better for them. So anyway, now will this lead to a recession? Will the economy collapse? Well, it's definitely starting to hit some of these bigger players with a lot of money and a lot of capital, and that could be a big issue because now you see, okay, 10,000 employees here, 10,000 employees there, another 5,000 here, another 3,000 here. Well, that starts to add up. I mean, and then take maybe 500 different companies, a couple thousand employees at each company. That does start to take a big toll. And this is exactly what the Fed usually wants to do, is they want to go ahead and increase unemployment. And by doing this, it allows kind of the value of money become a little bit more worthwhile, and therefore reducing kind of that inflation thing. So anyway, there's a lot of things behind that, but overall, they do want to increase unemployment, allowing then the value of money to increase. But by doing this, by hurting the big companies, they're forced to fire people, and therefore, it slows down the economy and does create some problems, and it makes it even more difficult if you've got a job that can't keep up with inflation, or you're tight paying paycheck to paycheck and that kind of thing. So be very careful here over the next year as we go ahead and see more of this coming to light in some of the big companies, because that could create some more and more issues, strain on the financial markets, not only just in the stock market, but also you personally in the real world, the actual true economy, not just the market economy where we're actually doing, trades and that kind of stuff. Anyway, if you're interested to learn more about some of this stuff, definitely check out the Traders Fly website. You can also visit the criticalcharts.com website, and that's where I share more insight about trading and investing and other things. So anyways, have a great week ahead, and I will see you next time. Take care.